Trading has begun on China's new NASDAQ-style stock exchange, and prices have more than doubled on the Science and Technology Innovation Board of the Shanghai Stock Exchange. One company, Anji Microelectronics, jumped by more than 400%. The so-called star market has been launched in an effort to boost the credibility of the country's volatile stock markets. 25 companies from IT and other sectors are listed. China is the world's second biggest equity market behind the US, but it's been criticized for high levels of speculative activity and a lack of governance. Our reporter Clifford Coonan has taken a closer look at China's new high-tech market. There's quite an impressive debut. Has that been influenced by what's going on in Hong Kong?
I think it has. It's a hugely significant event, the launch of this board. But Hong Kong has always had an influence on what happens in China in terms of listings and the Shanghai Stock Exchange in particular. Certainly the uncertainty there in Hong Kong now with the demonstrations will feed into a benefit, I think, for the new listing in Shanghai.
Is that capital flight we're talking about?
Yes, yeah. I mean, they're worried that Hong Kong will start to experience capital flight. Investors don't like uncertainty, so they're going to say, well, we've got this shiny new exchange in Shanghai now, so why don't we look at there?
That new star market, well, how is it different from the regular market in Shanghai?
Well, the regular market in Shanghai is kind of it's sometimes seen as a bit of a casino. It's experienced incredible fluctuations over the years, and it's also seen as poorly governed. Decisions are made for reasons that the markets don't understand. There's influence from areas that people don't understand or don't know. So there seems to be an attempt to show that there's more clarity about this. And there's also structural issues, like it means it protects the founders of the companies with these voting rights, which means that actually in the last few minutes or in the last hour or so, we've seen some of the newest billionaires in the world. We can welcome them to the international community of billionaires. So it has this, it has a sort of a clearer, cleaner, high-tech approach, which I think the Chinese government really, really wants to embrace.
How risky is it for you and me to invest there?
I think it's still, anything in China is still going to be risky. It's going to be very domestically focused. And so a lot of the things that we take for granted in the West about transparency and when it comes to companies, for example, and knowing what way things are going, you still isn't clear how much of that we're going to get. So it's still going to be a risky venture. But the government has promised that there will be better governance. And in the short term, certainly it's going to be quite an interesting prospect, I think, for investors.
Is China now, ironically, a safer place for investments due to stability?
Well, I still think it's certainly more stable. I imagine the way investors are looking at it, to go back to Hong Kong, they see as more stability now in China than they do in Hong Kong because of what's happening there. At the same time, Hong Kong still has great transparency. There's a couple of big Chinese companies like Alibaba, which is supposed to be doing a second listing there. To see whether that actually takes place and if Hong Kong continues to thrive. I think overall Hong Kong is still the place to be for Asian investment for a lot of investors. But this new Shanghai exchange is definitely a game changer.
Clifford Coonan, thank you.